Ready to start investing but not sure where to begin? Let's break it down. First up, stocks. When you buy a stock, you own a small part of a company. For example, you could invest in big names like Apple, Amazon, or Tesla. If the company does well, your stock's value can go up. But remember, stocks can be risky since they can also go down. Next, bonds. Think of bonds like a loan you give to the government or a company. For instance, you might buy US Treasury bonds or corporate bonds from companies like Coca-Cola. They pay you back with interest over time. Bonds are generally safer but offer lower returns compared to stocks. Finally, mutual funds. These are a mix of stocks and bonds managed by experts. For example, you could invest in a fund like Vanguard 500 Index Fund or Fidelity Total Bond Fund. They spread your investment across different assets, which can lower risk. Perfect for beginners. So, which one's right for you? It depends on your risk tolerance and goals. Start small, do your research, and watch your money grow over time. Don't forget to like, share, and subscribe for more investing tips. See you next time.